Let's get some trader talk now from Tim Biggam of Delta Derivatives. Hello, Tim. CPI fell to 6% as predicted. Next up, we have retail sales and PPI out as we gather information about inflation this week. The market had a fairly big reaction to that CPI number.
Yeah, and it's a reaction to not only to CPI, certainly not hot. And I think if PPI comes in line, that will certainly bolster the case for perhaps the Fed pausing here post, the bank issues we saw over the past several days. So markets that came off the low, pretty much based on the fact that they expect interest rates to pull back from here. We saw the 10-year yield, which was around 4% not too long ago, head towards 3.5%. Now we're kind of in between that range. So I think the market's kind of found a range here, Angie, going forward. Be interesting to see what happens after the Fed meeting, too, coming up in a little over a week and a half.
But that Fed meeting starts next Tuesday, and it's going to be interesting. Until then, what's your trade of the day, Tim?
Yeah, actually looking at these bank stocks, some of the big banks, the JP Morgans, Citigroups, Bank Americas of the world, that got hit pretty hard, have come down sharply, now starting to rally nicely here. But more importantly, with interest rates lower, their dividend yields have become more attractive. So I like buying the shares here and then selling out of the money calls. Implied volatility jumped on the recent stock weakness. So getting a much bigger option premium on the call sale. Stocks are cheaper because of the drop, dividends richer. So I like it on all three fronts going forward. I think it's a way to play what I perceive to be probably will be a kind of range bound market for the foreseeable future.
Okay, Tim, lots of great information. Thank you.
You bet. Anytime, Ange. Take care.
Go to businessfirstam.com for where to see our show on TV.